When you look back in basically 2017, and we entering 2018, we were afraid of having a dislocation into the sector. They had been, in the beginning, we had the past 2 years, we had a dislocation away from, pretty much away from staples into the tech stocks, and now we are seeing that reverse. So most of the investors were underweight the sector and now coming back to becoming more neutral.
So, in a defensive-minded market, would you expect this group to outperform next year?
Absolutely. We are very positive with our outlook for 2019. We continue to look into having names like Procter & Gamble, which is our top pick, along with a name that is more growthy, Constellation Brands and Pepsi. So I've seen investors coming back to looking at the sector in size because of the defensiveness, and especially with the pricing coming back to, as we see at the data, pricing, companies being able to price with inflation, and on top of improvement in the cost profile with oil prices coming down.
Do you think Procter & Gamble's got it figured out?
Yeah, it has definitely improved with new management, and recently they had this analyst day, which they hold every 2 years, and has been a stock we upgraded the stock back on October 19 intraday with the numbers, so they had a very strong quarter, and I believe they are on a good trend to continue to outperform the market.
And why Pepsi ahead of Coke?
That's a very good question. I think the call, to be honest, hasn't worked in the last 12 months. But I think as we position into 2019, Coke against Pepsi, it has been the premium of Coke versus Pepsi is in all-time highs. And I think that when you look at valuation-wise, but also when they're positioning to pricing into next year, they should be able to improve. And then snacks had a very good performance and improving now with the Nielsen data, so it should be a good name to own.